This displacement is taking traders out that are trailing stop loss orders as it runs higher. Look at this low to this high. Imagine, you don't need a fib to do this. Imagine where 50% would be. From here to here, where's half? And what would reside just at 50% of that range or below it? We have an imbalance in here. We have sell side liquidity here. And we have an order block, the last down closed candle right before this displacement on the outside. So we have the market run down into the order block. A little excitement on the downside, but that's fine. In here, I want you to take a look at what's going on. We have the high and price running to and through. So why doesn't it just go back down like the previous example where I was saying that old highs isn't the be all end all for buying? If it breaks above old highs, it's not going to act as support all the time. And it's not always the case when we have a little imbalance here that it would trade not just to this old high, but down to this imbalance and then go higher. That's what you would reasonably expect. This is not what the algorithm does. You have to consider what has just transpired. The algorithm has traded down, and the change in the state of delivery for stop running sets the tone for not needing to come back down to this, but needing to come back into this displacement. So think about how we started the buy program and we were looking for certain things to be there. This creates like another minor or smaller buy program within the larger buy program. So it creates another fractal. So the change in the state of delivery here starts with the stop run. This is important because the fact that we ran stops on the sell side now indicates that it does not need to come back down in here again. So when it runs higher and takes this high out, when it retraces lower, we don't look for just this imbalance right in here. We look at the breaker here because why? The context is a stop run just took place. So don't think that it needs to come back below this low again, or that it needs to just only trade here. Anticipate it trading to the breaker and any imbalance that starts here with the last down closed candle. So think the same thing that started the buy program initially in this teaching, in this very video, and how this is very close to what was the beginning of the buy program. We wait for that displacement, then it comes back down into the last down closed candle. Everything's repeating here within the larger context of that daily buy program. The market trades to the order block here and runs, but look what it does. It just takes out this high on a very shallow basis. That's indicative when you're bullish that we're going to retrace again, and the only thing you need to look for is not a run back down below this low, because this only referred to this order block after the stop run. So neither this low or this low needs to be traded through. So the logic algorithmically is, okay, this low's in place. It's not likely to be, if it takes this low out, we have a deeper retracement in order. And then if it goes below this low here, it's not just taking this low out, it would probably run for these relative equal lows over here. And then that would upset, in my opinion, the buy program. So you would have to move to the sideline. Now, I just gave you a mouthful, but I'm telling you exactly what the secrets are on how to work within the algorithm within a buy program. Everything I'm saying here would be reversed if it was in a sell program. But back to this shallow run initially above this high. If it runs here and it starts to drop from here, where's it going? It's going to an order block or an imbalance. We have both here. We have a small little fair value gap and the last down closed candle within this run. So this is all that's required. So your eye should go right to that. There's your order block. It trades down to it here and then starts to build another price run higher and more meaningfully trades through these highs.